All right, everybody, recording is officially underway. Happy Monday. It's 9:30 on the 1st of March. It's a weekly outlook for the 1st through the 5th. We'll take a look at all things stocks, forex, cryptos. Nice to be with everybody today. Thanks for tuning in once again. Hope you all have a fantastic weekend. And good morning, David. Good morning, Gary. And for the sake of recording, Wayne, Edward, Denise, Jordan, David, Chris, good morning. Larry, good morning. Not yet, Donna. I think what I'm going to do on that haircut situation is I need that dollar Swiss to pay me as well. Euro Swiss was great, but we talked a long time about dollar Swiss as well. So I think that's the official the shave-worthy haircut. If dollar Swiss hits 93.50, so we'll talk about that today. Okay. All right, let's go ahead and jump into the charts here. I'm recording on my end. Everything's coming through loud and clear, good. So we're on Facebook, we're on Twitch, we're on YouTube, we're on Twitter /Periscope and LinkedIn. Nice to see everybody. All right, good. Okay, we're going to get into the charts here. Understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. You know the dealio. If you're following me out there on social media, I'm easy to find. YouTube.com/Chris Pulver. On Facebook, Facebook.com/Chris Pulver Trading. You can send me direct messages on Instagram at Pulver.Chris. Follow me on Twitter at PulverChris. Or just, like the channel on YouTube. YouTube.com/Chris Pulver. Easiest way to find me out there. Okay. My Keep It Seriously Simple Best Trading Strategies, a video series that's free education. I just posted one last week on trade management. That's for winners and losers. That was actually posted Friday after our weekly recap session. So I saw that several of you were able to jump in and either join me in the premiere or check it out over the weekend, which was awesome. Hopefully you enjoyed that session. And also be kicking off a couple of videos this week. These are going to be a lot shorter. The Trading Indicators video series. This is going to be like maybe a 5 to 10 minute video just focusing on one particular indicator. So just be looking for those to be added to my channel and my playlists. And let's go ahead and dive into the markets. Just a little recap from last week. Market-wise, we did have the Dow Jones down negative 1.78%. Let me go into the markets here. So we had the Dow Jones negative 1.78% last week. The S&P was down 2.5% last week. The NASDAQ was down nearly 5% last week. And Bitcoin down nearly 20% last week. Big movers and shakers. Now, we were sitting here, in the trading room, the flex room, trying to time things. What was interesting is the movements were so violent through part of the week. This is the dollar index. And we just saw this amazing 48-hour period with dollar strength. This was Wednesday. Actually, no, this is Thursday, Friday of last week, and this is today's trading so far. So dollar index, coming in off of some fresh lows. The levels that I'm looking at is the dollar hitting some fresh lows, disagreement with momentum, disagreement with the relative strength. To me, that was bullish divergence. And considering the dollar index has room to get back up into previous support, right in here, which is around 11,900 on the dollar index, that's US dollar. Okay, so 11,900 still has room to get to the upside on the dollar. I think that's where we are going. It would also make sense that after a fifth wave move, we'd have some type of A, B, C correction. So we might have a move coming like this on the dollar that gets us back into this 11,900. So this is going to be a profit target for me in addition to this yearly pivot, which is around 12,100. So if I have target number 1 and profit target number 2 on the dollar index, and this will translate hopefully into currency pairs like Aussie dollar, Euro dollar, pound dollar, New Zealand dollar, dollar CAD, dollar Swiss, and dollar yen. Now, they're not all going to move perfectly in sync with the dollar index, but for the most part, that's the correlation we will see. All right, another thing that's going to be really important that we watch this week is going to be the 10-year Treasury. This is what started to stir things up last week. This is why the market really took a big nosedive, because the yields are starting to increase. The yields were starting to tick up. In fact, we had a threefold increase in the 10-year note. So we started out last year with lows around 0.5%, and we were up last week to the highs of 1.6. So recently, yes, things have settled back down, but this, really dramatic increase right in here on the 10-year note was what was starting to scare the markets a little bit. So that is why we started to see those aggressive sell-offs last week. Now the market is coming back in a big way. In fact, Wall Street is officially open right now, and I noticed everything pre-market was gapping higher. So let's take a look at our market really quickly. Let's go to the 5-minute chart, because we should have gapped pretty significantly higher today. All right, so this is the S&P. Look at the difference from last week's close. This is the 5-minute on the SPY, so ETF trading. This is the SPY from last week's Friday close to today's open, right? That's a big gap. That's a crazy big gap. So we have a close around 380, and we had a gap open around 385. I mean, that's a big move, right? So $5 out of 380, we're looking at over 1% gap to the upside on the SPY. So there's clearly some buy the dip interest, especially if the 10-year note is going to settle back down a little bit. Okay, let's see here. Damien says, just bought gold at $17.40, silver at $26, second trade. Yeah, we'll take a look at that, Damien. We'll take a look at gold and silver. Yep, we will for sure. Okay, so the SPY, again, off the lows, and again, closing low last week, ending the day Friday near the lows for a losing week on all the major indices in the U.S. Bitcoin down, 20%, which is crazy from the highs around, 58 or so. But anyway, I mean, so clearly there's interest, right? There's interest to buy. The market, I mean, the fundamentals, in my opinion, aren't really changing. Overall, if I go to the daily chart and we take a look at the SPY and the DIA and the QQQ, we're not going to see any massive structure damage on this so far. So what I think traders need to be ready for, and we've been preparing for this in the Flex Room for quite a while, is we expect there to be higher volatility. Now, we might see this low to these lows right in here. Like we might be seeing some type of channel maybe to the upside, something like this, where this is a higher volatility environment. It's not a one-sided trade like it would be just all buyers, just keep going higher and breaking higher. What this could be is we could have dips that are bought, 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 and this could continue to go on until something either allows this to push higher or we end up breaking some major structure. Okay, so the bears still have not cracked the downside. We had a pretty wild ride last week. We had, I mean, if you look at price action last week, this was a pretty intense week, right? To start things off, this was last week, Monday, Tuesday, Wednesday, Thursday. And so last week we had, this big fight to the upside on Tuesday, Wednesday, and then Thursday, Friday, just smashed it back down and completely reset it. So, today's going to be an interesting day. I think I'm certainly watching that 10-year Treasury note to see if that's going to lead the market a little bit. I mean, after running up very quickly to 1.61, let's consider this. Okay, let's consider this for kind of risk on versus risk off trading. I'm going to go ahead and put a Fibonacci on here. And speaking of Fibonacci's and Gann retracements, that's going to be my next Keep It Seriously Simple video series. Just outlining, how to look at them, how to trade them, common behavior in the markets, where we're looking at as far as retracement levels and extension levels. That's going to be a nice little timeless lesson for everybody. So let me find that fib retracement here. Let's go from low to high. Okay, low to high. Now we're going to combine this with another one of my favorite patterns, which is the double bottom, and that is right here. So we're going to take this area. This is a low, right? We have equal lows right in here around 0.50. This is a center high, so pay attention to this. So this is a low, this is a low, this is a center high. A double bottom does this. We have a low, we have a center high, we have a low. Now, what makes this a double bottom and completes this pattern is when we actually break above this center high, we expect this to double in size. Okay, so if I just go ahead and take this move and clone that, this was my measured double bottom. This is my projected pattern. Okay, so my projected pattern does push the 10-year note into 1.4%, right? And we got up to 1.6. That was just, call it momentum, call it follow through. But we did complete that double bottom pattern. Now, oftentimes our double bottoms and double tops, those are major reversal patterns. And so I would imagine that over the coming months, probably, unless this is going to continue to be very violent one way or the other, I would imagine that this move to this move is going to settle back down into this area. So let's be looking for something like, let's say we form a top here at 1.6 on the 10-year note, and we settle back down into this 1% area. Let's say between 1.00 and 1.20. Okay, look at our fibs. We have the 38%, we have the 50, we have the 618. If we settle back into this window, this could be a low to high, higher low, and eventually we do see this pushing higher. Okay, now this probably isn't going to be immediate, but I would say that right now things are going to settle back down into this area, right? So I would expect the risk appetite to come back in. If the 10-year is going to drop a little bit, then risk appetite would come back in, which means I would be looking to buy the dip on the SPY, the QQQ, and the DIA. I would be looking to buy the dip on any stock you've been watching, any stock you've been liking. I would look for some levels to be buying dips and buying things on sale, buying discounts, and just trying to get repositioned. Okay. But the reason I keep talking about this is I'm in the process right now of looking for a new house, building a new house, and trying to make sure that my interest rates are locked in as low as possible. And this is actually affecting that day to day. So if we settle back into this 1.2 or 1.00 area, I am probably going to be looking to see what I can do to lock in rates, even well before we actually close on the house, because I think that's the plan. I mean, I want more house for the least amount of interest. That gives me more capital to play with for other investments. Okay. But this is what really started to kind of spur the market last week. I think this is why we had the big sell-off, because we're showing that yields are on the rise, which leads investors to believe that rates will ultimately be on the rise as well. But the Fed has, stood by dovishness. Janet Yellen and Jerome Powell both saying they're monitoring inflation, employment levels. They're far from normal and far from where they want them to be. And so those Fed initiatives and data points are going to be really important to continue to see the Fed monitor over the coming months. Okay, but we are gapping higher on the SPY and the DIA and the NASDAQ, both fighting back. Let's take a look really quickly at those major ETFs. So our NASDAQ did actually break this channel. Okay, now take a look at this really quickly. Tech heavy, right? QQQ is the NASDAQ ETF. It is tech heavy. Now we've seen what Apple slide, we've seen Amazon slide, we've seen Google slide, we've seen Facebook slide, we've seen Tesla slide a lot. This is a potential. I say potential because we didn't really break any lower. But notice how we had this low from back in January, February of this year, and then we have these lows from last week. Is this setting up a potential topping pattern? Is it that easy on the QQQ to see a topping pattern? I don't know. I'm honestly not that convinced. I feel like this equal low could just push right back into this channel, and the NASDAQ will do something like this, where there's a low, the market ends up testing the highs and just breaking the highs, and this still keeps going. So I'm just not convinced right now that fundamentally we should be sellers. I think that last week it was a great spot to be profitable in the currency markets because we saw that risk off tone. We've been long with the dollar. We've been short against the Aussie, and that paid out really nicely last week. So we had trades running in the trade room on Euro Aussie, Euro New Zealand, Pound Aussie we didn't get in, but Pound New Zealand we did. Pound Canadian I'm short on. So we've got a lot of great currency pairs that are translating nicely into what stocks are doing. Okay. So what I'm looking at here for the Qs is if this low is, let's say we have a higher low, or I'm sorry, a lower high. So we have this low, this low. If we pull back into this channel, let's say around 330, okay, around 320. If we pull back into around 320 on this QQQ, is this a lower high that's going to form for this to finish up some type of corrective pattern to the downside? Or is this simply using this area, maybe it goes a little bit lower, uses that as support to come right back up into the channel, right? So as it stands right now, I mean, I'm watching this area very carefully because if we close back inside this channel, the bulls are probably going to get the upper hand and keep this channel integrity intact, right? But if we end up chopping around here where it creates some indecision, now we're going to be watching for closes below, closes above, and we'll have to see if there's some type of breakout we can follow on the NASDAQ. All right, volatility index, this is the VIX. You can see that today it is pushing it right back down after highs of last week around 31. So again, you're seeing this heightened volatility in stocks. You're seeing heightened volatility in the markets in general. Now, we have some range levels that we're watching, $20 support, and we have resistance here between the mid 30s, and I'm still looking at this this pivot actually at 40. This is $40 on the VIX. We will probably be dealing with this for a while. Okay, we might have one more scare or spike to the upside to have us hit that $40 yearly pivot, but keep watching this $20 level. Okay, so because I like being long volatility, I'm still holding long in the VXX. And last week this is actually in profit pretty nicely, and you can see that today it is smashing it right back down. So really bullish last week as of Thursday. Friday it pushed it back down. Today it's opening back lower. We're gapping lower. Again, levels I'm watching. I'm watching for any type of gap fills in here with the the VXX. I'm looking for any confirmation on the right-hand side of this trend line to see can we have some sustained volatility to the upside. Now, typically the correlation is if we are showing upward movement on the volatility instruments, that means that stocks generally are bearish. Okay, so again, until the stock market really breaks major structure, I would just be looking left of the VXX, major lows down here, and we could just push right back into this, $13 area on the VXX. We could be pushing back into, I think it's like $12 and $11 on the VIXY. Yep, so right here around $11 on the VIXY. So you can see this really simple structure. There's a low, there's a low. We'd have to break this trend line. Yearly pivots are excellent profit targets on these volatility trades. So I'm still holding VIXY, I'm still holding VXX, and I'm just looking for volatility to hopefully pay me out in the next couple of months. Okay? All right. So let's take a look. I want to review some stocks really quickly. So we saw that a lot of major stocks were down. Tesla at 688. Just look at the big levels. We talked about this on Friday during the weekly recap. There's a 382 to 50 to 618 window right in here. Okay, if we hit $500 on Tesla, I'm going to buy it again. I took some breakout trades early on. Held during the 5-to-1 reverse split that Tesla did last year, and still had a base position that I put in, and I should have waited. I realized I should have waited, but it was small, and I will throw another trade in here around $500 on Tesla. Okay, so this is what I'm waiting for. Chart alarms are set. Monthly pivots right here around 522. Previous resistance right at 500. So anything close to that $500 area on Tesla, I'm going to be buying. Okay, take a look at Amazon. Amazon, same thing, lots of sideways movement. I have a base position on Amazon right around $3,000. That was added last year after still having some holdings, but I've added more at $3,000. So if Amazon is going to stay range bound, $3,000 to $3,400, $3,000 to $3,400, $3,000 to $3,400. Eventually, I'm looking for Amazon, to go higher. If Amazon breaks the structure here to the downside, let's say it breaks and heads lower. Well, we have a range right here for about $400. Could it drop another? Could we get to like 2,900, drop to 2,500? Sure. I would happily buy Amazon at a discount, right? Amazon in here around $2,400 to $2,200. Those are big levels I could buy. Many traders now have brokers that allow you to trade partial stocks. So you don't have to have $3,100 to buy a share of Amazon. If you have $100, $50, $10, whatever, you can buy fractional shares for a lot of these majors. Okay, which is helpful, right? To at least get started on it. Microsoft is another one that I like. Microsoft recently made some new highs. I'm looking for Microsoft to try to pull back into the $200 area. So we have all of this resistance here. We could hold this level, but if we have tech, tech being weighed down a little bit, I would imagine that Microsoft can dip back into these, low 200 levels. I'm looking to add more to Microsoft. This is one that I hold long term with dividends. What other ones here? Apple. Okay, Apple 123. I'm sitting here back in this 4-to-1 split from last year around $100. And would I add more? Sure, I would add more at $100. Level 1 at 100. If we came back into this previous resistance, level 2 at 80. Anything back to dips around 60. Level 3. Okay, do I think Apple's going to get down into the $50, $60 area again? Probably not. Of course, anything's possible, but I would imagine that we're going to deal with some type of consolidation in here. And you're looking at highs around 140, lows around 100. You can play that range. And I think eventually Apple, let's say 6 months, 12 months, eventually Apple, ends up breaking some new highs. We've seen it many times before. Apple has had reverse splits many times over the 20, 30 years that have been very popular since really the iPod. Apple's had many splits, and they just continue to have a ton of cash and just tons of product loyalty. So anyway, those are some companies that I like. Some EV ones we talked about last week on Friday. Workhorse had a rough week, losing that contract to the post office. And I think they lost. Who'd they lose that to, by the way? They lost that to Oshkosh, which was kind of weird. I was like, you guys make suspenders for little kids, and then you also make cars or trucks for the post service? I'm kidding, but Workhorse lost that contract for the government. Anyway, we're at 1576. I still own Workhorse right around $17. And that's just one spot. That was a limit buy from last week. If it comes back into the single digits, sub $5, I'll buy Workhorse again at $5 and hang on to it. Okay, so a little EV play if you want to check that out. From last week, I think I shared like 8 or 9 different stocks that I'm in on a kind of an EV portfolio for electric vehicles. Okay, all right, let's take a look here. All good? Yes. Okay. So let's get into some currency pairs. I talked on Friday about some reload positions and some reload levels, and so let's see some of those. So we have the Aussie dollar pulling back. This is actually good. Let's go down to a smaller time frame. So this is what I'm doing right now on the Aussie dollar. All I did from this recent slide was take a Fibonacci from the high and swung it down to the low from Friday. Okay? All I'm looking to do is watch and see how price behaves, and I'm looking to see, do we get another push lower? Now, we may, and we'll talk about this more this week in the flex room, we may see price do this, right? Price might pull back into a bit of a channel, so we have this really aggressive slide. Price pulls back into a channel, and then we have price pushing down in towards this 127. If it goes down further than that, so the 1618 extension, that's fine. That's 7,500. 7,600 I'd also be pretty happy with. So if we have an A, B, C, D, whether it's this level or this level, this is going to be my profit window on anything lower for the Aussie dollar. Okay? Anything lower. All right. And now levels that I'm looking at, I'm looking at the 382, the 50, and the 618. So anything around 7,800 to 78. Let's say between 7,800 and 7,900. Okay, looking for some bearishness to confirm in that window. And so how do we get there? Well, it might be a little correction here first. Maybe we break a trend line, but I'm looking to see if the Aussie dollar can push lower. Same thing on Aussie yen. You're going to see some similarities here on a lot of these currency pairs. Aussie yen, very aggressive sell-off from last week. So I'll take my fib, plot it right there. Okay. So if we have our high, we have our low. If we pull back into this 382, 50, 618 zone, I'm looking for this to give us some type of lower low. So all it is A, B, C, D, a swing from high to low, lower high to lower low. If the Aussie yen does that, anything lower, I'm looking to take profit. All right, so I did take some partial profits last week. I had trades in here, trades in here. That was a profit from Friday. I am looking to get back in around this 382 and 618 entries. So small, and even up here. I'm looking to kind of reload some of those positions on Aussie yen short and Aussie dollar short. I'm also holding long on my Euro Aussie and my Pound New Zealand, looking for robots to help me get back in. So if you're with me in the Price Action Pro, one of my robots there, our Euro Aussie trade is still, I closed out for profits. I closed out the trades manually, but the robot is still activated looking for those confirmation entries. And it'll re-enter, okay? So Euro Aussie, Euro New Zealand, and Pound New Zealand are looking for buy trades once again this week. All right, any questions on that? So Aussie dollar, Aussie yen, looking for some simple Fibonacci behavior, high to low, lower high to lower low. And so we'll be looking for these entries. You can look at a trend line break. You can look at a Fibonacci level and some bearish candlesticks. You can, I mean, if you've been watching like how I've been using Heikin-Ashi candles, if you want to see this thing go to red, go to Heikin-Ashi. Okay, so if we come back into this Fibonacci swing, what we could look for just from simple color candles on the Heikin-Ashi, these are again kind of trend bars. If we have the 38% and then this thing turns red, or we have a 50 or 61% and this turns red, that could be a potential entry with a swing. So we have a stop loss above the high, and we're looking for a push lower. Okay, so that's all it is high, low, lower high, lower low. Anything that pushes into this 127 and 1618, that to me is a profit window, right? I don't want to hold on to this and think like it's got to go a lot lower. It's like it doesn't have to. We could come back into this 80 round number. This 618 is 80.15. I'd be pretty happy with that because we really didn't start building this position until around 82 and 8300. So if we get back to 80, we should be able to close out for some pretty nice profit. Okay, are we good on that? All right, so those look pretty good for some reloads. Like I mentioned also, the Euro Aussie, same thing here. Euro Aussie had this fantastic swing to the upside. So we have this low to this high. If we have a pullback, I'm looking for this to push higher. So higher low, looking for evidence here for higher lows, looking for a swing to push higher and break this long-time trend line that we have been patiently waiting for. Yes, I mean, this trend line goes back for about 5 months. High, 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 all these resistance levels. If we can finally break this trend line here to there, right? There's a lot of open space to the upside on Euro Aussie. So we took some partial profits here, looking to get back in on confirmation. If we can get it, let's see if we can break and go higher. Euro New Zealand is going to be very similar to that. Euro New Zealand, did this one break the trend line? Nope. You can see the high, you can see all the resistance levels, right? So did it break the trend line? Not yet. So we took some profit on this one from last week. If it settles back in, we're looking for confirmation to buy more. Looking for this price to push up into the trend line. Okay, Pound New Zealand, same thing. Pound New Zealand, we had a breakout here around 9,100. So this was a breakout to the upside. We held this low. Hopefully this will stay here and then push higher towards this yearly pivot. So I'm still holding long on Pound New Zealand, looking for 9,700 or higher. Okay, I did get a couple of trades running on the Pound CAD, so we're short on Pound CAD. We're at 9636. If we get back down to this low, which is around 75.50, I'm looking to also close some profit on the Pound CAD. Okay, Swiss yen is another one. I reloaded on Swiss yen, 117.50. Did anybody take that trade with me? Is anyone still holding 117.55? I got back in on the Swiss yen. So we had this trade here for profit. I reloaded at 117.50, and I'm back in profit around 70. It's about 90 pips right now, and still pushing. Okay, so I have some reload trades going. Here's one of my setups here, one of my accounts. So let's go back here, the reload on that Pound CAD. So profit is in, it's up about 107 pips right now on the Pound CAD. And the Swiss yen, reloaded on Swiss yen, that's up about 86 pips right now and counting. So still getting some decent pushes on that. Okay, also have some partial profits running on dollar Swiss. So these are all in profit right now. Dollar Swiss, Aussie dollar, Swiss yen, New Zealand dollar, New Zealand CAD. So I'm still looking for some partial profits to continue to collect on a lot of these currency pairs. Right? So it's been a long time. We've been waiting for a lot of these. Right? But things are starting to turn our way. The tides are shifting in our favor. And now we're just looking to make sure we can protect and manage our profits to the best of our ability. Okay? Anything else? I mean, like I said, I don't want to go like super long on Monday's weekly outlook. I wanted to, discuss kind of what the big picture is this week is probably going to be the battle between risk on and risk off. What I will show is where we at with currency strength. So if I have a lot of stock traders out there, look, any company you've been eyeing, any stock you've been wanting to get in on, look at the big technical levels and place chart alarms and get ready to buy at better prices. All right. We'll probably see the market respond. It seems like every kind of 1 to 3% dip we're getting, the markets are more interested in buying those dips as opposed to trying to push down lower. I mean, the bears are very quick for the day or two, and then they pretty much fade away, and the bulls come right back. So it is a bit of a tug of war right now, as illustrated by the volatility index. But taking a look at currencies, we talked about this on Friday. Look at this kind of poster of risk on versus risk off. So we have risk appetite currency pairs right here, the Aussie and the New Zealand. They were the weakest last week on Friday. Okay, dollar was strong, yen was strong, Swiss was strong, euro was strong. Now the CAD was up here in the middle because oil's still been pretty steady, but Aussie, New Zealand are really the ones that are affected the most. So when we see risk appetite, this gets stronger. Okay, when we see risk appetite, these are weaker. So what you're staring at right here, this is actually risk off, right? So this is risk off trading when we have dollar strength, yen strength, Swiss strength, and even the euro gets a little bit stronger, actually tends to get a little bit stronger now with a risk off tone. And then your Aussie and New Zealand are much, much softer during risk off. Now you go into today's trading and you will see that today it is a very different story. Today you have the Aussie on top, the CAD on top, and the New Zealand on top. This is risk on trading or risk appetite. You see that the Swiss is back down getting its butt kicked. I'm totally fine with that, right? Our Euro Swiss paid us nicely last week. Our CAD Swiss paid us nicely last week. We're long on dollar Swiss. As long as we see the dollar here and the Swiss lower, that dollar Swiss is still going to be working up towards 93.50, right? And I'm fine with it. Like the Swiss can be as weak as it wants for as long as it wants, so we can make some good cash, all right? But this is a good example of just kind of watching things and how this correlates into the stock market. If we see risk appetite in currency pairs, expect there to be some buying the dips in the stock market. And today's interesting because we saw so much movement in the futures market ahead of the U.S. Open that we might end up filling those gaps maybe by today. Maybe by certainly the next couple of days. So even going into the SPY and taking a look at a smaller time frame, if we go to the 5-minute chart here, because these gaps are so big, take a look. You notice how everything is pushing stronger today. I mean, the reality is this, traders. This is the gap. This is the low from Friday to the open of today. So this entire area is a gap. Now, that doesn't mean that we're going to fill the entire gap. What I would imagine we see is, see this little gap right here? Let's say that today we push up, we push up, we push up, and then we end up filling this gap later. I don't think we're coming all the way back down to this level, not without a fight. So today looks like we are bullish from the onset with a gap higher. We're bullish from the open, and unfortunately, I mean, we didn't even have a chance to see a dip or a pullback to actually buy. So it's essentially just aggressive gap to the upside. I'm sure buyers are looking to take some profit here. Maybe later on this morning, maybe let's see if we come back into any major structure from last week. This is a big sell-off from last week. I mean, there's obviously not a lot of gaps there. From day to day, we don't see a lot of gaps. So that gap was filled. That gap was filled. There's some pockets right in here around 388. We know that we have the highs recently around 394. So it is what it is. I think the bulls are going to struggle to take out new highs. We have this low, we have this low. We might see the gap today, challenging the levels from last week, but we'll probably end up falling back down. I feel like I keep saying high volatility. Expect this to be a tug of war. Okay? I mean, realize we're overstretched to 12-year highs. We're overstretched to new historical highs. We're only 3% off historical highs. So even though everyone was getting a little nervous last week, we're only 3% off the highs. Some not even that, right? And so if it's like 3%, that's a great discount, and everyone's buying at 3% discount. That's fine. I guess that's what that we're going to deal with. But I would imagine that we are going to see some very difficult churns in here where day to day things can literally change every single day. Like week to week, we can have risk on week, risk off week, risk on week, risk off week. And it might be difficult to have one clear direction, right? So if you are trading, I think short-term trading, I'm still looking to buy low. I'm still looking to buy dips. I'm still looking to protect my capital. If we have stocks that are at great levels, look to buy those stocks at great levels. Okay, I think this year, right now, this year is about building the strongest possible portfolio. Right? I mean, we pretty much had all the growth in 2020. I know that the other fundamentals for this year is coronavirus vaccine globally and the return to normal, fundamentally and economically. If the Fed is still looking at labor, looking at jobs, looking at inflation numbers, they're going to continue to stay dovish. So even with the 10-year note trickling higher like we saw at 1.6, it's probably going to settle back in to the just above 1%. Now, should we end up going higher? Yes, because if you see the correlation, over time, we've seen, rates that were much higher. 2000, when the stock market dropped, we had rates around like 10%. 2008, when we had the market drop, we had rates around 4 to 5%. Now, what's interesting is we have had this pretty much from 2008, we've had nothing but bullishness in stocks, and our rates have gone to all-time lows. So that, I mean, I guess the big debate is how is our monetary policy actually going to normalize after we have just suppressed it to near zero for the last 10 years? And so if you think back to 2017, 2018, where the Fed was tapering, the Fed was looking to, scale back mortgage-backed securities, scale back bond buying, taper off, and start to raise interest rates. 2018, we ended the year with a very terrible, 20% slide in the stock market. And then it bottomed out. 2019 was a great year. 2020 was a wild year that ended up finishing, crazy high after March. Obviously, March's, crash ended up just yielding this amazing, kind of missing out type trade where everyone just tossed kitchen sink money at it. So again, there's just a lot of things going on that are kind of pulling extremes. We have highs and lows. We have, high volatility all over the place. The most important thing is, don't fight the path of least resistance right now. So I don't think being heroic and trying to call tops and bottoms is the best play. I think you do what you can to build the strongest possible portfolio. Trading forex, we trade forex. Trading cryptos, we trade cryptos. Stock wise, I'm trying to build the strongest portfolio for a mix of short-term gains, but also long-term investments. So to wrap up here today, we've been going for just about 40 minutes. I'd like to take a look at cryptos really quickly. Okay, so Bitcoin is at 48290. Now we talked about this on Friday. Where do I think cryptos are going? Where do I think Bitcoin is going? If I see this high to low, I would not be surprised to see Bitcoin pull back to a lower high. So we have a high right here, okay, right around 58,000. I'm looking for a lower high to form. And if we have a lower high forming, I think that we're going to end up falling back into this, mid 30s. I think that Bitcoin can ultimately come back into these mining levels around 20,000, right? But this could be this move. This move we could push up one more time. Everyone is super happy again, and then this ends up dropping, right? I mean, the more and more we get stretched away from these mining levels, I think the more inevitable it is that we come back and find them. So at first, let's go to the smaller time frame. Let's go down to a daily chart here. Or I'm on the daily chart. Let's go to the 4-hour chart. Look at this. Okay, so let's watch and see how the structure behaves. If we just have this big blast off to the upside, fine. Then that's why everybody's long on cryptos and we can celebrate it once again. But if we have this level here, high to low, we pull back to equal highs, don't be surprised if we form a lower high and Bitcoin pushes lower. Okay, now what's going to be interesting is there a correlation? Will there be a correlation between Bitcoin if it does end up dropping lower? Will Bitcoin also drag the major stock markets with it? So will we see the S&P dip lower? Will we see the Dow Jones and the Nasdaq drift lower? Okay, I mean we are seeing some correlation. It's not super tight. All right, but is there a correlation between Bitcoin's move and the stock market? Is it truly risk appetite with stock markets rallying? Will Bitcoin follow through with that? Or are we going to be a bit stuck? I don't know. So we're trying to make some more sense out of that. Is it a strong correlation? If so, if the stock markets want to make some new highs, then Bitcoin is probably going to surge to new highs as well. But I would be watching this structure here if we make new highs, because I think that's going to be short-lived. Because here's what's going to happen. Traders, I'm not going to say traders, I'll say people in general. If we see new highs in Bitcoin, they're going to feel like, again, they missed out, right? They missed out here when we made new highs. If they miss out here on new highs, what are they going to do? They're going to put more money in at highs. Traders are going to end up shorting that. There's going to be profit taking here, right? Our mining costs at 20,000 are going to keep trickling a little bit higher, but they are overstretched. So I just think that what you're probably going to be dealing with over the next several months is higher volatility, bigger swings, more extremes. So we have to be prepared for that. I continue to hold cryptos to the upside. So Bitcoin, Litecoin, Ethereum, Ripple, 8 or 9 coins that I'm in, I'm looking to hold and just see how high they can go. But the reality is I'm still prepared for all of them. Bitcoin, let's say Bitcoin leads the way. I'm still prepared for Bitcoin to drop. If it drops into 35,000 or 30,000, that would be a technical correction. If it drops into previous lows or this yearly pivot around 20,000, it's a magnet, right? So it just depends on this. Are we going to see, 60 to 70,000 first before we drop back down to 20? Are we going to see 100,000 first before we drop back to 20? I don't know. Okay, or will we actually have a correction here that allows there to be some buying interest that can build up over time? If we can actually see this telegraphed over time, it would be awesome to have, traders and investors excited about loading back up around 30, loading back up around 20,000, and then get the next big leg to the upside. But trading is not necessarily that easy, and the market doesn't always give us those type of simple clues. So we're holding on, right? The HODL, the holding on for dear life. We'll see what happens. But we will continue to monitor this. We'll talk about it every single day. That is our point. Okay. Paul, yep. Paul, if you have my Telegram channel for that, so for the Flex Trading Room, my Telegram, I will post a class for that today. I don't think there's actually anything scheduled for it. I have to get that scheduled for 4 o'clock today. Yep, I saw your question earlier. Okay, anything else for me today? I don't want to go too long. We've been at it for 40 minutes. I think that's good to kind of wrap up the recording here. Anything you want to have me chat about? Anything you want to discuss? So we will be watching, again, bounce back from last week. We had nearly 2 to 3% sell-offs in most of the markets. The Nasdaq nearly down 5%. One more thing for this week, we do have a pretty important earnings week. So it's March 1st, where this is going to be the final trading month for quarter one. So Monday the 1st all the way down to the 31st, we'll have a full trading month lined up here. So this is Q1. We should see higher volatility in Q1, typically March 15th. I call this the pre-summer push, where we're not even close to summer yet, but like this, March and April and May, we tend to see better trending, better volatility, and it's going to be interesting. I think that this, DXY, okay, watching the DXY on let me go to this, the higher time frame here. The DXY is something I'm certainly watching very closely, and also the dollar index. All right, the DXY still has room to previous support and our fourth wave and the yearly pivot. So the DXY, as in dollar index, would be going back up into this area here. This is my profit window. If the DXY does not exactly get to the yearly pivot, I'm not holding on for that trade. If we go into a low high, higher low, higher high, if we swing on this dollar as a correction, I'm looking to take as much profit as I possibly can out of this dollar strength. Dollar index, very similar. Okay, so if we have a 1, 2, 3 on the dollar index, same thing here. This level of support to become resistance, this past high, this yearly pivot. This is my window of profit on the dollar. Right, so that should affect most of our currency pairs we're in. We don't have a ton of exposure, but we are in Aussie dollar short, New Zealand dollar short. I'm in pound dollar short. I say that all. It's like, yeah, I'm in most of these. Dollar CAD's my favorites. If you're interested, my favorites. I really like dollar CAD long. I think dollar CAD long is going to be a good trade. I don't think the bottom is necessarily in yet, but watching this type of area here. Okay, watch for this thing to chop around, and we'll get a nice move to the upside. Okay, one thing that has not turned yet for the dollar CAD is oil. If oil is not going to drift back below $60, then the dollar CAD is going to remain pretty firm. Okay, so dollar Swiss I also really like. This is one of my favorites here. The yearly pivot is creeping up towards 9183. I am a huge fan of this currency pair. I've been in this thing since, this is going into last year. So, August of last year to these lows, equal lows, drifting back up to the yearly pivot. What I'm looking for is this. If we hit this yearly pivot, fantastic. I hope it pulls back and finds the March monthly pivot and then rallies up into 93.50. We might be looking at a bigger move. Like the dollar Swiss might be the one that surprises us, and the Swiss franc in general just gets very, very weak over this period. So there is part of me that wants to try to hang on to some profit for the long term. But for my big target, it's going to be 9350. 9350 is a fantastic pocket on this dollar Swiss. I think we can find it all day long. What I'm wondering is if we come up to this area first, pull back and consolidate, build up a bigger pattern here. This could be building up this amazing head and shoulders trade where we have a right shoulder and this thing goes to back to parity, 1.00 or higher. Okay, so there will be some good ones. Damien asked about gold. I forgot about Damien and gold earlier. So yeah, let's take a look at XAU USD. Gold is at $17. So we lows at $17.20. And Damien, where'd you buy that at? You bought it at $17.40. Okay, perfect. So look, gold at lows at $17.20, 17. I mean, that's a great spot. Past resistance right over here. I did say that gold may. I mean, look, this is all corrective, right? I mean, we had this massive swing to the upside, especially this recent swing in gold from around 1450 all the way to 2100. All of this from this low to this high, to me, this is all corrective. This is all corrective. Okay, so gold could settle back in. I mean, I think if you're looking at that, Damien, like position wise, if this is 1740 is trade one, and it comes back into, I mean, 1600 to me looks fantastic. 1600 to 1500 looks great for level 2, and then back down to this previous resistance area around 1300. Write this number down, 1365. 1365 was this major breakout point where we were long gold because of that breakout. So if this is going to be past resistance and a breakout point, maybe price finds a way to settle back into that 1365. But this would be, a swing, correction. I'm looking for higher lows, actually. I'm looking for higher lows and see if gold can keep pushing higher. But until then, I think that you're just getting a great spot to buy it. This is a great spot to be long gold, but small, so you can work yourself into a trade, cost average into it, and expect this to go higher. I also really like silver, and silver's at $26.90. I think that silver is going to have one more push to the downside. So if this chops back up towards $30 or fails at $30, I think silver drops back into 22. I'm loading up. I'm pretty heavy on silver around $22. So trade one at 22. If it comes back into this $16, $17 area, level two, and all the way back down to March lows, certainly level three for long term. So I still like gold and silver both long. It's just that, understand that they're in a corrective phase right now. Silver should drop back down to 22. There's a yearly pivot. Gold is still in that corrective channel. Okay. All right, traders. So that being said, again, I want to keep these weekly outlooks relatively quick and concentrated. So we talked a lot, right? We talked stocks, we talked forex, we talked cryptos. We have a lot of stuff to digest this week. Watch the 10-year note. Okay, watch the TNX. Watching the 10-year note really quickly, not TRNX, TNX. Watching the 10-year note this week. So we've already pulled back 0.2 tenths. So from that, from 0.2 divided by 1.41. Okay, we've already pulled back 14% from the highs of last week. That's a pretty, that's, again, 14% correction. Now, do we settle back into this area here? I'd say we'll probably stay supported probably above 1%. 1.0 on the TNX will probably stay supported. If we settle back in here for a while, that's not a surprise. All right. We saw an uptick in volatility. Watch those volatility gauges like the VIX, the VXX, the VIXY. I certainly hope that the VIX has more profit potential than just this. This is not going to make me happy if I just see this happening over and over and over again. What I'd like to see is another decent spike back up into $40. Okay, and I don't know how that's going to happen. Maybe it's sell and may go away. Maybe it's something later this year. I'm not sure. Okay, but we certainly have higher volatility across the board. We should start to see some better trends in March and in April. That's a pre-summer push. So this is going to be a big month to wrap up Q1. Let's keep our eyes open. Let's keep our trades objective. Let's make sure we make good investments in stocks. Follow these indices closely, and we have a lot of currency pairs and cryptos to talk about as well. Okay, all right, traders. I'll go ahead and stop the recording there. Thanks for being with me today. See you this week in my Flex trading room. And we'll be back out on Friday for a weekly recap, Friday at 9:30 a.m. Okay, all right, let's have a good trading week. Talk to you soon. Thanks, bye.